Okay, this video is meant to walk you through the first lecture of Financial Accounting, Business 2, and we're going to start with this lineup: syllabus, class guidelines, and the schedule. We'll review some Business 1 concepts, then we'll get into Chapter 7, which we hope you've read. Okay, first a quick review of Business 1, that business is governed by a language, just like engineering or law or medicine or other professional practices, and accounting is the language of business. If you don't understand accounting, you will probably not go very far in business. There are certainly lots of professions, but accounting is how a score is kept, and you need to understand accounting, especially if you want to further your own career. Okay, there's all kinds of government agencies. We know that FASB is the Financial Accounting Standards Board. GAAP is Generally Accepted Accounting Principles. This is not guidelines. Actually, they are guidelines, but they're governed by FASB. And of course, the SEC is Securities and Exchange Commission. American Institute of Certified Public Accountants is actually a professional organization that helps govern what accountants should and shouldn't do. It has all kinds of professional guidelines and professional development, so you need to be aware of that as well. Okay, financial statements. We hopefully understand the balance sheet equation, which is the single most important part of Business 1. If you don't understand assets equals liabilities plus owner's equity, always, 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 there are no exceptions to this rule for every transaction, for every balance sheet, for every set of transactions. You need to understand that very, very well. Okay, so please know that equation. And here's one that I call the essence of business. If you take in more revenues than money you spend in the form of expenses, then what's left over is your net income. This is business in a nutshell. You charge a certain amount, you have certain costs, and if the money you take in from charges you charge to customers or others is more than what you spend, then you have some net income. Please understand that's also known as earnings or profit. Income, earnings, profit all mean the same thing. A lot of people, not in the business world so much, but others, confuse revenues with income. They are not the same thing. But you as an accounting student should understand that income, profit, and earnings are all the same thing. Okay, statement of retained earnings or statement of changes of owner's equity governs how that statement changes the equity in the company, and it begins with the beginning equity plus net income minus withdrawals here plus any other changes in owner's equity equals your ending equity in the company. Okay, so you need to understand that. For a publicly traded company, you start with beginning retained earnings. That's the sum of all earnings in the company's history less the dividends they pay out, and you start with that beginning balance, add in the net income for this period, subtract out dividends you pay to shareholders, and then that you come up with your new ending retained earnings. Okay, I'm going to stop right there before we get into Chapter 7 and see how this is going for us. So that'll be the first section of this lecture.